Cut the video and audio, by the way, for everybody. Welcome to Startup Talk. I'm your host, Craig Major, the startup coach and founder of Toronto Starts. And with me today is Tefari Bailey, founder and CEO of Hutsey. How you doing?
I'm great. How are you today, Craig? Thank you so much for having me on your amazing podcast.
I'm doing great. And something I didn't say, probably should have said beforehand. And for those of you who know me, this is day 6 without coffee. So I normally have at least a pot of coffee before I go and get coffee. And so this is, it's been a change for me. I'm a little more grumpier than usual, but I think that's going to pass. So we're here to talk about Hutsey. And let's get off right away. Tell us, what is Hutsey?
Definitely, in a brief high-level overview, Hutsy is a prepaid card that comes with a companion app to help our clients build credit, invest, earn cash back, save, and track finances with ease. We also do have a vertical that allows our clients to get early access to payroll so that they don't have to get any short-term loans to last until payday.
Yeah, I saw that. I saw if you're using your card under regular that you can get prepayment or pre-use it before your money's in. How does that work?
Yeah, it's a great question. So how that does work is for users that are with Hutsy Financial Banking, and if they do have direct deposit set up, they will be able to get access to early payroll a couple of days early, access to up to $300 within 5 days, due to the manner that, you know, normal people get paid every 2 weeks, and that's something that was introduced since the 60s, since people were working in factories and things of that nature. Everything else has changed, else has evolved, but why not your pay cycle? Why is that still the same? So we really want to make a change there.
That's great. And I know a lot of people get stuck in those I don't remember off the top of my head the big yellow signs, the money marts and the pay whatever, the payday loans are trying to get a few bucks extra for the weekend or whatnot. And this hopefully will eliminate some of that because people, that's a trap, eh? It kills you financially once you start doing that.
Yeah, most definitely leaves you trapped in a life cycle of debt that you really can't get out of. And if you don't really pay attention, after a while, you'll be getting one payday loan to cover the fees for the other payday loans. And that's where they get you.
So, what were you like growing up? Were you a handful for your parents? Were you studious? Are you into music, sports, socializing?
Great question. So not necessarily into music growing up, but I was really athletic. I was an athlete. My parents were always working hard, 2 jobs, Monday to Saturday. So I never really had a lot of time with them. So I would see how hard they worked, and that energy really transferred over to me. And then I got into basketball. I was I was that guy that would wake up at 6 o'clock in the morning, go to the LA Fitness and train, bring my high school, middle school teammates, etc., with me so we could prepare while in season or even not in the season to get ready for next year. So that's really what I was like. My passion was basketball. I had a lot of friends growing up because naturally being an athlete and a captain, you learn the value and the importance of teamwork, building a team and having those skills and communicating with others. So that's how my childhood went.
I think it's important for people to play team sports. That's a great thing you hit on there, and I also think it's important for as a young individual, at least, you should play team sports because you understand the value of other people and the cog and stronger together, but also being on a winning team and being on a losing team. Both those feelings are important, and understanding how to lose well and understanding how to win well.
No, definitely agree with you. And it really does relate to the startup world as well, learning how to lose in a team atmosphere instead of getting down on yourself to figure out why did we lose this game? Let's go back and look at the film. What could we do to improve and get better? So then it builds your confidence so that in the real world, if you're failing, instead of giving up, you're looking at ways to improve and get better so you don't lose going forward in the future.
Agreed. So after your sports and being a captain, where did that take you? Did university, early career paths? Where did Tafari go?
That took me to Brock University out in St. Catharines, Ontario, where I did business economics there.
Yeah, I used to go to Brock ages ago. I remember Alfie's when it before it became the teachers' lounge. Then they got that big entertainment area out front. And how was Brock for you?
Rock was an amazing experience. I would say that was probably the best 5 years of my life, getting to really understand life, meet new people, and be open to completely different setting.
So when did you know you wanted to be an entrepreneur? Was it right out of university, or did it take some time?
It was actually while I was in university. My experience in the finance industry saw me working at TD Canada Trust, where I did everything from the entry level teller position all the way up to a financial and investment advisor. And a lot of people that would come to see me that I generally noticed had the best quality of life and actually found happiness were the ones that were business for self, where they didn't really have to be bossed around by anybody or go to a job that they hate. So I would say 50% was there and 50% was from my roommates. So in the summertime, as you know, a lot of people that went to Brock weren't from St. Catharines. They would go back home to their place, but I would always stay for the summertime, and I had a different set of roommates that I would bunk with in the summertime, and they were all entrepreneurship heavy. One of my roommates was in digital marketing. One opened up a virtual reality company. The other, a taxi company that probably owns more market share than Uber in the Niagara region. And just being around those guys every day and sulking in the hustle, the energy, and the motivation to create a startup, that really led me to believe that this is something I want to do in the future.
So, you could be doing any startup, coming from your environment with your roommates, I'm sure ideas were flying crazy left and right on the things you could be doing. So, when you decided to do Hutsy, why this idea? Why did you choose this over any other idea? I like to say opportunity cost is infinite, meaning instead of working on this, you could be working on any number of things, but you decided to work on this. So, why?
I would totally agree with you, Craig, coming from an economics background. Opportunity cost is everything. So why I ultimately decided to, start Hutsey when there's a million other companies in the world that you could really get into, or business models you could get into, is due to the matter that about knowledge. When it comes to my background was in finance. This is a passion I genuinely had. So if I wanted to create a self-driving car startup, or let's say something like that, I don't really have a background educationally or a passion to pursue something like that. But when it comes to banking, I mentioned my first big boy job was at TD Canada Trust. I really understood the fundamentals and principles of banking, money, and finance there. So I was able to take that here.
It seems what you're doing is going to require a team. And, it's not only that, but a lot of partners, and we're going to get some of that later. But finding the right co founders or the first key members can be crucial for an early stage startup. Can you tell me how you met your co founders or the leadership team?
For sure. So when it comes to the leadership at Hutsy Financial, we have three core people. There's myself, Tefari Bailey. There's my head of operations, Tawari Kaboy, my head of customer success, Shaniqua Gans. Funny thing is, we all have worked for TD Canada Trust at one point in time, but in different departments. So this is a problem that all of us really wanted to solve due to the manner that I was on the retail side, where I was able to, see the actual banking accounts of these people that were using payday lending services and how the quality of life depreciated. Shaniqua DeGans, who was also working for TD Canada Trust, she was more so on the back end stuff, analyzing trends and data of people that were forced to take these kind of loans and see how the quality of life decreased, or the financial well-being, I should say. And Tyree Kabui, who was more so on the fraud and KYC department. So with all of our expertise in our specific fields in the banking region, we were able to come together and ultimately create this platform in Hutsey Financial. So it's really important to have great co-founders whose skills don't overlap what you already know. That way, nobody's stepping on each other's foot, and you're really able to scale vertically.
So let me ask you about the idea. How did you come up with this idea? Was it you alone having some issues with the bank, hearing stories from your friend? Was it your people gathered around? When did the light bulb go on? What was your aha moment?
The aha moment had to have been when I was a financial advisor for TV working in Stony Creek. I was working in a lower income area where a lot of people would come to me to get a loan on a daily basis. And for those of you that are in banking that know the stuff, you're not the one actually approving the application. You just fill in the information that's required of you to fill in, and then you're sending it back to the credit adjudication team in the back end. You wait a couple of days, and either A, they approve it, or B, they decline it, or C, they may approve it with some sort of conditions. But a lot of people, unfortunately, that were working with me were getting declined, and there was a payday lending shop in our same plaza. So these guys wouldn't be able to get money from us. They would be forced to go to payday lenders and get a loan at a ridiculously high interest rate. I read an article saying that since the COVID-19 pandemic started, some payday lenders are charging APRs over 780%, which is, horrible. As we mentioned, that leaves people trapped in a life cycle of debt. And seeing how the financial well-being just continued to depreciate over time with me being their advisor, seeing this, and as I mentioned to you earlier, seeing firsthand people taking payday loans in order to pay off other payday loans. So that's when the aha moment came into place. And it's like, what if we could do something better? What if we could improve the financial well-being of Canadians? What if we could offer a service in which we could give these Canadians access to capital at a 0% interest rate to prevent them from having to go to these predatory payday lenders? And if you are unfamiliar with the industry, it's a $56 billion industry in Canada and the US. About 2 to 3 million Canadians are using these payday lending services annually. And we really wanted to solve that problem.
And it's a good problem to solve. People don't necessarily know my background, but I worked for Davis and Henderson for some time doing software implementation for the big six banks, and one of my big clients was TD Financial Services. We ran a lot of their web stuff, back end and different things. But going through, yeah, the formulas, the all the steps they need to do for approvals and routing and everything it needs to go. It's a complex process for all this stuff, and there's a lot of little things they check for, and it's if you don't know anything about your credit or how to build it, you won't get approved. So how do you help those people who don't know anything about credit and why they need it?
That's another great question. One of the things that we were talking about offline before we went live, Craig, was a lot of these companies are really implementing financial education to their users. And that's really what we want to start doing. We want to provide financial literacy and education to our people, to our clients, to let them know what it takes to build a credit score. Like a post that we made on Instagram, I believe it was yesterday or 2 days ago, it was, what are the factors that determine what your credit score are, to really educate these people on that. Because two people could have the exact same job, employer, financial status, but one person could be more educated on what it takes to get a better credit score and kind of maneuver their financial moves in order to increase their score, while the other person isn't. And they have the same job and everything, but it's just one person knows what it takes to improve your score and the others. So as you could see with other fintech companies coming up in Canada, the US, internationally, a lot of them aren't even looking at your credit score anymore. They're just leveraging big data, machine learning, and data algorithms to determine, what their version of credit score is based on a bunch of macro and micro metadata points. Affirm is probably the leader in this space when it comes to personal unsecured loans, and they're not really valuing your credit score. And another company in Toronto that's also doing something similar is Progressa, where they are looking at your credit score, but it's not primarily what they're focused on like the big 5 or 6 banks.
So let's dive right into Hutsy. How does it work?
Great question. So what is Hutsey and how does it work? How does it work? As I mentioned, Hutsey is a prepaid card that comes with a companion app to allow our users to invest, save, track finances, and earn cash back with ease. So when you say how does it work, it's not necessarily a one shoe fits all. There's a bunch of different use cases for people using Hutsey Financial. Ideally, the ideal customer for us would be somebody that, maybe they're not in the best credit situation. maybe they do have some unsecured debt with outstanding payday lenders and subprime lenders, and we bring them in. We give them the tools and the resources to build their credit score. We take on that debt for them and we help them pay it down. So they start off at the bottom of the customer journey and then they move slowly up after we have cleared their unsecured debt for them. After we've built that credit score for them, they move to the top of the customer journey, and then we get them into investments, into savings, into, if they have a family, if they have children, getting them to bank with us at Hutsey. So we're really taking them at their lowest and helping them become the best version of themselves with respect to their financial well-being. And then they're a customer of ours for life. We really want to, we genuinely care for our customers. Unlike, I don't want to necessarily say that bigger banks don't care for their customers, but you could almost say they're disincentivized to really help these customers out because it cuts into their profits. Whereas whether you are a multi-million-dollar client or if you're somebody that's struggling in debt, we're treating you guys with the same respect.
And that's excellent. And you mentioned here about getting money back or saving money with Hutsey. Can you tell us how that works?
Yes, for sure. So we do have two accounts, so three accounts. We do have our classic and we do have our premium. So with our classic plan, you're getting about 0.5% cash back on all purchases that you make online or in store. We also do have a ton of partners where you also get more cash back at up to 30% with our premium card and up to 15% with our basic card. And that cash back comes to you right away after that purchase. Whereas with traditional financial institutions, you only really get cash back on credit cards if you have a cash back Visa or MasterCard with that financial institution.
And I noticed you have overdraft protection. How does that work, or does it?
And another good question. So how overdraft protection works, it's for people that have overdrawn their balance. For the first $100, we will not be charging them anything because we understand that things happen. For example, if somebody has $50 in their bank account left, they go to Walmart to spend $100 on groceries. Now they're negative $50 into their overdraft. We're not charging them an interest rate on that because, as I mentioned, stuff happens. But ultimately, that's how our fee-free overdraft protection works.
That and I mean that's banks charge you more depending on all sorts of reasons around that. So that's something I've not seen in a prepaid card before.
Yeah, definitely, definitely. I think one of the main reasons to that are big banks. They have tons of thousands of employees across Canada and the US, and they have a ton of commercial office spaces. So they're spending billions of dollars on a monthly basis when it comes to employee salaries, when it comes to commercial real estate and things of that nature. So they really can't afford to offer the great rates that neobanks like ourselves are able to offer due to the matter that we have less overhead expenses and things of that nature.
Is the card usable everywhere?
Yeah, so the card will be used anywhere where Visa and MasterCard are accepted.
Fantastic. And you mentioned Neobank. Can you tell us, our audience, what exactly is a neobank?
Yeah, for sure. So for those that don't know what a neobank is, by definition, a neobank is a type of direct banks that operates exclusively online without traditional physical branch networks. So in short form, an online digital bank.
So we talked about this, I think, briefly just beforehand. You know, in my parents' time, it used to be that you just you stuck with a local bank, and that was the way it worked. You know, have things changed? I see a lot of fintechs companies saying that people nowadays switch based on a better app. Um, is that the case? And if so, how do you plan on competing in this market?
That could definitely be the case, Craig. You're definitely right on that due to the matter that if you have been banking with a specific financial institution for 50 years and you have your RSP, you're with financial planning and things of that nature, it might you probably wouldn't want to switch over to a new bank when you've been with them for over half of your life. But when it comes to the new generation, why other neobanks typically target millennials are due to the manner that they would be more inclined to switch. If they're all here for what's giving them a better rate, what's giving them faster, safer, better financial products. And if neobanks are offering free accounts, cash back on all services, access to early payroll, free overdraft, free ATM withdrawals, and big banks are not able to compete and offer those services, 9 times out of 10, a millennial or somebody like that would switch over to the neobank instead of the traditional financial institution, as they don't have any emotional connection with that institution.
Yeah, and I think historically people were afraid to switch institutions because it took so long for them to get to know you and go through the ropes, all the stuff we were talking about earlier on. So you have that fear of lock in a little bit. So who is your ideal client? Who should be on Hutsey?
So when it comes to who our ideal client is, as I mentioned, it's not a one shoe fits all. We have different products that could really help anybody at the specific life cycle. So when it comes down to, if we had to pick one customer segment group that we are targeting the most, it would be the 45% of Canadians living paycheck to paycheck. It would be the 2 to 3% of the 2 to 3 million Canadians that are using payday lending services annually, because we want to help. Primarily, what we want to do more than anything is help clear that debt, first of all, is help increase your credit score, second of all, thirdly, bring your financial well-being up. And then after we've done all of the things I've mentioned below, to start getting you into investing, getting you to incentivize for savings, start preparing you for retirement, and bringing your family along with you, creating them Hutsey accounts as well. But that's not to say that, for example, if somebody had no debt, their credit score is awesome. That's not to say that we wouldn't want to work with those clients as well, because we ultimately will have programs for them in the future as well, due to the manner that, we're offering free accounts, access to early payroll, and all of the cool, amazing features that I mentioned above. So some people just probably want a better deal than what the traditional banks are giving them. So anybody could really bank with us.
So I see that you're accepting people to get on your wait list, on Hutsy.ca. When is the app launching?
So we would anticipate our app launching in about August of 2021. And you're absolutely correct. We do have a wait list going on our website, in which you can find at www.Hutsy.ca. We have seen a significant amount of traction thus far in the couple of months that we've launched this. We have roughly about 5,200 plus people on the wait list, and we're excited to continue to grow that.
So everyone talks about hustle, and I know you're pre-launch with your app, but what are you doing to build your audience and get traction?
So to build the audience and get traction, the first thing I'm doing is researching other online digital banks, physical banks, not only in Canada, in the United States, in the United Kingdom, in Europe, and seeing what their primary methods for customer acquisition is. And a lot of things me and my research and development team noticed is that 52% of clients on neobanks are coming from direct. So people going to the website directly. 32% is coming from organic SEO search. So a big chunk is coming from organic SEO search and direct. So we're looking to optimize for those things by coming on podcasts with great people like yourself, Craig, by creating blogs and financial education on our social media platforms, so we could build the awareness, where we're not really trying to sell people to bank with Hutsey, but we're providing them with knowledge, resources, and information that would make them say, wow, this is great content. This is cool stuff. I would love to bank with these guys without directly selling them on any of their products or services.
I like to share both successes and failures, so there's a chance that anyone listening or watching won't make the same mistake. Is there a time where you screwed up and made the wrong pivot or startup decision that you can share?
Yeah, most definitely. When it comes to a pivot, so first of all, funny story. When Hutsey first started off, we were supposed to be a real estate investing company. So if you look at our old logo, which I have on a hoodie right here, if you look closely, you could actually see the H is a real estate. And why this came up is due to the manner, as I mentioned to you, Craig, you went to Brock University in St. Catharines. A lot of people go home in the summertime. They don't stick around unless they have summer school. So I lived in an area called the Lofts. Rent there was about $600 per room, and there was 4 rooms in one apartment unit. So a lot of people would go home and they would be spending $600 a month for their room for 4 months, and they're not there. Whereas I would go and talk to those people directly and say, hey, if you're going to be spending $600 a month, how about I pay you $200 a month for your room? So that way you're only spending four and not six. So I would get those leases and then I would release those out to my friends and other people for about $400. So I'm saying, hey, instead of you having to pay $600 for rent for a place like this, I'll give it to you for four. So then I could profit about $200 a room, $800 a unit. So that was my first experience in real estate rental arbitrage. That was really successful. That really, helped me get by with my tuition and living expenses while in university. And then after graduation, it's like I wasn't in St. Catharines anymore, so I wouldn't be able to do that there. So I was thinking, I'm in the big city of Toronto now. How about we do a similar play like that here? And then that's how Hutsey was founded. Instead of Hutsey Financial, we were going to call the company Hutsey Stays, and we were going to rent a ton of units downtown Toronto in partnership with the landlords and re-rent them out on places such as Airbnb, Booking.com, Expedia, TripAdvisor, ultimately what Sonder in the United States and OIO Rooms out in India does. But then the COVID-19 pandemic hit, so we were forced to really pivot because travel was locked off. Airbnb in specific buildings in Toronto was locked off. So we would have went bankrupt before we even started. So that was definitely one major screw up in our company life cycle. And another one was when we first started Hutsey Financial, we were ultimately giving out payday alternative loans. So places like Money Mart, Cash for You, and things of that nature, other payday lenders were charging APRs well over 500%. So we wanted to get into the same industry and charge APRs of, let's say, 250%, which is 50% lower. We thought we were doing a favor. We got a lot of clients. We made a great return on our investment, but we really weren't solving a problem. A lot of these people that had finished paying off the loans, they were still coming back to us for loans to get renewed. Their financial status wasn't getting any better. So, as a team, we got together and figured out we really aren't solving a problem. We're just continuing to keep people in debt. So those were the two major obstacles that we had to go through, screw ups in Hutsey's short life cycle.
Well, it just sounds like a few natural pivots along the way. Um, do you have any tips for other early stage founders?
Any tips for other early stage founders? Yeah, first of all, I would like to say that it's much easier to scale vertically than horizontally. So focus on your primary product first, get that right before moving on to other products. Secondly, worry about getting from A to B, not A to Z. Have a great team of people around you, even if you're cash strapped. Just always remember that your first team is not going to be your A team. And it's always good to have A plus players in that specific field that they're doing. If you are a business development guy, don't try to get into coding because it will take you a couple of years to learn how to be an A plus player in that aspect. Just go and hire a coder. Bring somebody on. So instead of you having to spend 2 to 3 years of your life learning how to do that, they've already spent 2 to 3 years, if not more, of their lives learning how to perfect that skill. And thirdly, define what success looks like for you and go from there. Because you may speak to venture capital firms, you may speak to angel investors, etc., and their definition of success might be different from yours. You might be a Canadian startup, you might want to stay in Canada, but the angel investors or venture capital firms or maybe other colleagues say, no, we're going to go into the US, into the United Kingdom, into Europe. But define what success looks like for you and don't go away from your core concept. Those are the three pieces of advice I would give to upcoming entrepreneurs.
You mentioned angel and VC investors in there. I understand you're currently raising money on equity crowdfunding. How's that going?
Yeah, that's great. So we're actually raising capital via Equivesto, which is a licensed emerging equity crowdfunding platform out in Toronto, Ontario. We, I believe we've reached 100% of our minimum goal within the first week, and we were the fastest company to do that. Right now, we're currently overfunded at 140%, but everything is still open. You are still able to invest. I believe the campaign is going on for about 25 days. So you're definitely able to invest in that. And I'm sure Craig will post the link in the description here. So equity crowdfunding is awesome. It's everything. One of the reasons why I wanted to do that was a lot of family, friends, and colleagues have asked me how they could get in and invest in the company, but legally they're not allowed to do it unless we have a licensed provider doing something like Equivesto providing the resources to do that. So if you're an entrepreneur and you're unable to get angel investment or venture capital investments due to the manner that you don't have any connections to any angels or any venture capital firms, don't worry. There's a ton of other resources such as equity crowdfunding and Equivesto. If you're in Ontario, they have you covered. And I also do want to mention that there has been a lot of successful companies that have raised via equity crowdfunding and went on to raise tons of millions of dollars in future funding after that. So now with fintech becoming more normalized in Canada and Ontario specifically, there are a ton of resources to get what you want to get accomplished when it comes to your fundraising goals.
Yeah, and people actually want to invest and they want to have alternatives. We've seen the Robin Hood stories in the U.S. How all the retail, the local investors, the small people who want to put their money in, it's nice to have platforms like Equivesto where we can go and invest. I think as little as $100. I'm not sure where your minimum starts in startups, either locally or I think with equity crowdfunding, you have to be in the province that you're raising, and so it'd be Ontario here. I think Equivesto operates in 7 or 8 provinces. We have Alex Morsink from Equivesto on fairly frequently, mentoring and doing other things. So the team there always does an excellent job, and the people I talk to who have raised on there always have been happy with them. So if you're interested in that, check out Equivesto. Sounds like you're having a good experience with them, and being 141% overfunded in 7 days is pretty impressive.
Definitely, definitely. I do want to touch upon what you said, Craig. So Equivesto, they allow entrepreneurs and investors from Ontario, British Columbia, Nova Scotia, and Alberta to either invest or become to invest or a company to raise capital on. So we've been on Equivesto's platform for a couple of months now, and yeah, we didn't raise 140% of our goal within the first week. I wish that would be
Oh.
awesome, but it did take about a month and a half to do so.
My apologies. um, so, with equity crowdfunding or speaking to investors or just, starting a startup, how important is being able to pitch for an entrepreneur?
Being able to pitch as an entrepreneur is everything. You need to be able to sell a story. You need to be able to sell your dream and your visions to your investors, potential investors, audience, and your future customers. Most investors that I've spoken to, they invest in people first. So even before the idea, they're investing in people, who you are, who your team is, what are your core values, beliefs, ethics, and things of that nature. So I think that's definitely a skill if you're an entrepreneur that you're going to want to have down packaged, perfected, your elevator pitch.
Agreed. Do you have any advice for startups who are seeking advisors? It's something I get all the time. People looking for advisors, people looking for mentors. Do you have any advice for those?
Advice for people looking for advisors and mentors. I would definitely go to your direct group of other entrepreneurs and other people that you speak to on a daily basis that have expertise on this subject. and really ask them for recommendations. Hey, I'm in the health technology startup. Do you have any resources for somebody who is highly knowledgeable in this space? Somebody who's been there and done that before, and maybe even competitors for you that have been there and done that, maybe sold their company, maybe raised a couple of rounds of funding. Feel free to reach out to early employees there because they've been there and done that, and maybe they could help advise you along the way, due to the matter that it's only natural that you're going to make a ton of mistakes along the way in an early stage startup. But if you have the opportunity to bring somebody along as an advisor who's already made those mistakes and could prevent you and guide you in the right direction, you're going to be on a good path.
So what's next for you and Hutsey?
What's next for myself and Hutsey is definitely completing our funding round, launching our neobank, launching our application, and getting ready for micro adoption of Hutsey in Ontario. This is a $20 billion industry across the world, and it's expected to jump to 471 billion by 2027, growing at a rate of 47% a year. Canada is unfortunately always last to the market. When it comes to the neobanking concept, it's adopted in the US, it's adopted in the United Kingdom, it's adopted around the world. But Canada, I want to say the major banks still have a stronghold of 95% of the market here. So we're in the space at the right time. There are a couple of other people in this space that have proven success when it comes to micro adoption in Ontario and Canada in general. And it's been proven with the big five or big six banks here, it's been proven that this is not a space where one company is going to take all. This is not like a Facebook where Facebook is going to be the leader in that specific social media platform. We have TD, we have RBC, BMO, Scotiabank, Tangerine, CIBC, and they're all able to have some market share. So when it comes to neobanking, I think it'll be the same thing pretty much. But to differentiate ourselves, I feel that all neobanks should have a specific vertical in which they go for that differentiates themselves from the others. And ours is that we're really looking to help those 45% of Canadians living paycheck to paycheck, taking them when they're down here and bringing them up here. So that's where we differentiate ourselves compared to other neobanks across the world.
Fantastic. And if people want to find out more, where can they go and find you?
People want to find out more, feel free to go to www.Hutsy.ca, which is our website. You can find us on Instagram at Hutsey Financial, on LinkedIn at Hutsey Financial, and on Facebook at Hutsey Financial. And if you are interested in investing in Hutsey Financial, you could definitely do that on Equivesto's platform. Craig has posted the link inside of the chat for those who are interested.
Yeah, and I'll put the link in the show notes for those listening on the podcast. Thank you very much for taking the time to talk to me and being part of Startup Talk today. I really appreciated learning a lot about Hutsey and what's going on with the neobanks in Canada.
Really do appreciate it, Craig. I always see the Toronto Stars and the amazing podcasts that you're doing. So it's funny to be on the other side, being one of the guys that you're interviewing. I really do appreciate it.
It's always good talking to entrepreneurs that are doing stuff that's fun and innovative. So